Alright, welcome back to another market recap. Today we have a lot to cover. We have news of Iran launching missiles towards Israel, and the market has dumped. We are going to be talking about two possible trades you could have taken. One trade from Hydra, one trade from Dodgy, and also one trade outlined by me, not taken by me, but outlined because it was a BPR trade and did not fit in with my model. I'm trading strictly inverse fair value gaps for now. So we're also going to talk about the higher time frame and how this fit in with our weekly outlook. Even with this news coming out, we were still expecting a move down this week, and I'm going to show you why. I'm going to go into the charts and explain in detail what higher time frame key levels we were reacting off of and how you could have used that to frame a higher time frame narrative. So with this in mind, let's take a look at the charts. Starting out, we had a weekly fair value gap we were pushing into. This is something that we had been looking at for a while, especially in the last couple of weeks. We were saying this would be the draw on liquidity, and then once we pushed into it, we weren't sure how we were going to react, but once this daily candle closed back down above this swing high, we said that was a huge red flag and that this next week could take us down to possibly this weekly fair value gap. And you can see we have already reached this weekly fair value gap here. So we have also filled this weekly fair value gap, and we'll see how we react out of it. But we also mentioned how this was the previous week's low right here, right? And I mentioned this in my live stream, that this previous week's low would probably be the draw on liquidity for this week. And we have already came down and taken out the previous week's low within 2 days, the first 2 days of this week. So pretty crazy. Going back to the high time frame narrative, you also will note that this, I said this in my weekly outlook, that this is the midpoint of this order block here. So we reacted off the midpoint of this order block. This is called the mean threshold. You measure it from the bottom of the candle body to the top, and you can see this was a perfect reaction off of it. So this led me to think that this could be the top of a new market maker sell model. Now, I was only assuming this based off that perfect reaction, but it was a super clear reaction, and we did close back down above this high. So this led me to think that this could be a new possible market maker sell model forming. Anyway, let's jump into the lower time frame. We are going to talk about a couple trades you could have taken and how you could have used those, or how you could have used the higher time frame narrative to frame those trades. So first, I will note that we had London session from 2 until 5 here. From 2 until 5, we had London session, and right when I got on the charts at around 8:50, I hopped on and I had noted that we had swept out London's highs here. Sweep of London's highs. And then we had this market structure shift here. And then at this point, we had, if I go down to the even lower time frame, we had this 5-minute fair value gap that formed here, and this 8 o'clock high and this 8:25 high. This 8 o'clock high. This 8 o'clock high and this 8:25 high formed an SMT. You can see you have a high and a lower high, and on the NASDAQ you have a high and a higher high, and this formed within this 5-minute fair value gap. So I noted this on stream. I said this is pretty crazy that this happened. And then zooming down to the 1-minute chart, So this is all fractal. So this was a market maker sell model, right? And within this market maker sell model, you have another low time frame market maker sell model, right? And so we had the SMT at the top here, then we inversed this, came back down, and then we had this BPR here. This this right here was a BPR, and you can see price pushes back into this BPR. So this is a BPR is when you have a bullish fair value gap and a bearish fair value gap that overlap, vice versa. If this was a bullish one, you'd have a move down and then a move up, right? So anyway, the key here is that we swept out this high, and so because we swept out this high, this validated this BPR. And I was saying how this, especially with this SMT here, this could possibly be a trade you would take. Now, I'm not trading BPRs, so I did not take this trade, but I was saying how you could take this trade, especially because at that point, we got, you'll never believe it, another low time frame SMT. We got another SMT from at 9:03 to 9:10. So 9:03 to 9:10, another low time frame SMT, and this gave me a ton of conviction that we were possibly about to dump. So this gave me a ton of conviction. So you could have taken this trade. This is a possible trade that, once I get more confidence, I'm going to start taking possible trades like this, where you enter on these other types of trades besides inverse fair value gaps, right? Maybe down the road I'll start doing that. But anyway, I would have entered here, and you can see I would have targeted London lows. This was what I was saying was the drawn liquidity. And we clearly hit London's lows and then go straight down all the way to previous week's low. So you can see that happens to be right here. Previous week's low is right here. So if you had targeted previous week's low, you would have gotten a 26-to-1 risk reward trade if you had taken that for some reason. I would not recommend you do that, but yeah, previous week's low was hit. And yeah, that's a crazy trade right there. Anyway, it's not that easy to catch trades like that in real time, so I'm going to talk about two more realistic trades you could have taken. First off, we had this one from Doji here. This happened after I got off the charts at 11 o'clock. Unfortunately, I was off the charts, but this happened at 11:15, and essentially all it was a 2-minute inversion to the upside. Once we close back above, you would enter long here and stop loss below the newly created fair value gap, target this high. Boom. Nice trade here after we took out previous week's low, after we had swept sell side one more time. Top, center, wait. So yeah, after we swept sell side one more time, we got this inversion. Once this candle body closes above this old gap, that's when I would enter, and then I would target this high here. So very nice trade. Good trade from Doji. I got off the charts at 11, so I did not get this trade. And I'm going to continue to get off the charts at 11 because typically you're going to get a trade within this window of 8:50 until 11. So in the future, once, like, I don't know, if I end up having more time on my hands, I'll consider going until 12, because sometimes you'll get the trade between 11 and 12, but after 12 it starts to get really choppy, and that's lunch hour for New York, so it's not as good to trade at that time. So then we have another trade from Hydra. Let's take a look at this one from Hydra. We had this happen at like around 10:05. So let's go over 10:05. Okay. So this is interesting because I could have taken this trade, right? This is a trade that I definitely could have taken, and I was outlining that we should go down to previous week's low, but in the moment I just did not. I think this. I think what happened is this didn't look like an inverse to me, but he used this as he said that this did inverse, which I really don't think it did. And then the next candle closed all the way down here, and I just did not want to enter at that point. So he said that this was an inversion. Yeah, I guess it was close enough. I don't know. This is one of those trades where it's probably just an experience thing. When it closes like this and you have conviction that we're gonna go to the previous week's low, it's probably fine to enter, even though we missed this candle close below by like a couple points, like 1 point. Like, this is one of those things where as you get experience, you'll know that this might actually be fine. But it did not close below, so I did not take it. But we had swept this high, and yeah, it was a solid trade because we had such strong conviction in this previous week's low getting taken out, and you would have entered here. Stop loss. Stop loss up here, and then weekly previous week's low down there. So excellent trade. Yeah, once again, we did not close below the gap, but with conviction in this previous week's low, you definitely could have taken this trade. So nice trade from Hydra, and I think that about covers it. Yeah, I didn't see anyone else post anything on Twitter, so that about wraps it up. We got this trade from Hydra, we got this trade from Dodgy, and we had this BPR entry from me. So I did not see this in lifetime, but I mean, I did mark out this was a BPR in lifetime, but I did not call this trade out in lifetime. But with both these SMTs and this forming a sell model, I think this would have been a very nice trade. But I don't trade BPR entries because I'm sticking to inverse for value gaps. So that about covers it. I will see you guys in the next one. Bye.